The Chinese crypto game has been volatile over the past few years, and as we all might know, several factors contribute to this, including governmental and non-governmental policies. However, the Chinese have also played an integral part in developing and nourishing the market to its current form. Welcome to Moneymaker. Moneymaker is a channel dedicated to helping others become financially independent via movement through cryptocurrency trading and investing. Hello there, today we'll be talking about China X crypto mining. But before we dive straight into the video, make sure to like, subscribe, and share. Press the bell icon to never miss a video from us, and we are together in building your portfolio. China's sweeping ban on cryptocurrency mining was almost an attack on an industry criticized for its environmental impact. Still, emissions from the sector could grow unless other countries follow China's lead, climate and tech experts said. This indeed was good news for climate activists, who have voiced concerns over the potential for the energy-hungry cryptocurrency mining industry to disrupt international efforts to rein in global warming.
Oh, I see, no global warming.
Bitcoin and other cryptocurrencies are created and mined by high-powered computers competing to solve complex mathematical puzzles, guzzle energy, and fuel planet-warming emissions unless they consume electricity from renewable sources. According to more than half of local cryptocurrency production, Beijing's recent move has paralyzed the Chinese industry by making it far more difficult for individuals in China to trade digital coins.
It's difficult to accept this.
The new restrictions could push miners toward by cutting off access to China's power grid with its plentiful supply of affordable renewable energy. Peter Howson, a senior lecturer in international development of Northumbria University in Britain, said to the Thomson's Reuters Foundation, as we quote, "China produces enormous amounts of cheap hydroelectricity, especially in Sichuan province, all of which is now pretty much off limits to Bitcoin miners." So how was this decision made? According to CoinDesk, the official statement from China followed a meeting hosted by Vice Premier Liu He and is one of the most high-profile warnings against cryptocurrencies in recent years. Earlier in the week, Chinese authorities cracked down on the crypto industry as a whole, banning financial institutions from offering any form of crypto service. Bitcoin mining was not mentioned, but this news shows it is still on the government's radar. Before we move into any further details, I think it's essential to understand Bitcoin mining to get more perspective.
You need to know about this stuff, skunk.
This will also make sure all of our audiences are on the same page. So, new Bitcoins are created and recent transactions are verified through mining. Mining is crucial to maintaining the integrity of the system, but it also consumes a lot of energy. Bitcoin is like a very sophisticated database made up of a chain of individual blocks. To create a new block, miners must solve a complex puzzle and verify the transactions in the blockchain. The computer that solves the puzzle first wins and gains the transaction fees and a quantity of Bitcoin. But by design, only one block can be mined every 10 minutes. So that rate stays steady. The more computer power that's being expended to solve the puzzle, the more complex the puzzle becomes. That's why you see images of vast banks of computers all attempting to be the first to solve the puzzle. This built-in inefficiency is incredibly bad for the environment.
Buddy, this is bad.
According to research conducted by the University of Cambridge, the most popular digital currency in the world uses about the same amount of energy as the Netherlands or the United Arab Emirates. The broad-based weakness in the cryptocurrency market is due to high outflows resulting from the US dollar's rising valuation. It may be noted that the dollar has held its position near a multi-month high after the US Federal Reserve's hawkish tilt. But China's crackdown on cryptocurrency mining seems to be behind the new weakness. A report by Reuters suggests that Chinese authorities have now cracked down on crypto mining activities in the southwest province of Sichuan. As we might have guessed, China's crypto crackdown intensified recently as authorities continued to shut critical mining operations. It's a big blow to cryptocurrencies considering that China accounts for far more than half of the global Bitcoin production. According to the reports and official statements, the Sichuan Provincial Development and Reform Commission and the Sichuan Energy Bureau issued a joint notice demanding the closure of 26 suspected crypto mining projects. An important fact is that Sichuan is China's second biggest Bitcoin mining province. Other regional mining centers, including Xinjiang, Inner Mongolia, and Yunnan, have ordered crackdowns on Bitcoin mining. However, the fresh crackdown in Sichuan province indicates that China's displeasure with cryptocurrency mining extends beyond cases where it uses electricity generated by burning coal. We will have to look deep into that in order to find the answers.
Well, let's find out then, shall we?
While Bitcoin mining consumes large amounts of electricity, rising prices for cryptocurrency have ensured that it remains a hugely profitable enterprise. But come on, we know it's not all bad.
Wasn't all bad, was it?
Bitcoin mining also has a positive effect on a country's economy. It plays an essential role in reviving economies and providing employment in towns and cities that are not connected to economic nerve centers. For example, it has helped absorb surplus hydropower production in China's Sichuan province and employs workers in Inner Mongolia. The Cambridge research we mentioned earlier has also found that about 65% of Bitcoin mining takes place in China. The United States and Russia are second and third on the list respectively, with about 7% each. Since China is aiming to be carbon neutral by 2060 and reach its peak CO2 emissions before 2030, they announced guidelines in 2019 to curb the activity of Bitcoin miners. The statements regarding the crackdown of the crypto mines are a continuation of existing policy decisions. Although this is not new and we were more or less expecting a decision like this, crypto traders are not happy.
They're not happy.
They're not happy.
China has made several moves in recent years to restrict cryptocurrency investments, including banning cryptocurrency exchanges. But now they reflect an even stricter stance. Some observers believe this is because China plans to launch its centralized digital yuan, which is currently in a pilot phase. Within China, the Inner Mongolia region represents about 8% of the country's mining efforts. In late February, local authorities gave Bitcoin miners 2 months to shut down their operations, citing heavy pollution and environmental concerns. A few days ago, the Inner Mongolia Development and Reform Commission announced a hotline for people to report illegal Bitcoin mining farms. According to reports, Inner Mongolia also faces extra pressure from BEIJING to cut emissions because it's authorized more coal-fired plants than any other province in the last 5 years. Naturally, the question directs to, what does it mean for investors? In terms of mining, it's worth remembering that, unlike coal or gold, halving the number of miners would not halve the Bitcoin production. If a large proportion of Bitcoin miners shut down, the puzzle would become easier to solve and we'd still get a new block every 10 minutes. But that's unlikely. So what is a more likely scenario? Some mining will continue in China, but some operations will move to other countries. The US may benefit along with countries like Iceland, Georgia, Canada, and Estonia. While some Chinese miners are selling up, others are moving out and heading to Kazakhstan, a country that relies heavily on fossil fuels for electricity, or even Texas, where they could push up utility bills and worsen pre-existing power woes in the southern US state, researchers said. However, there are a few significant limitations to the US becoming a global mining destination.
I have overlooked every limitation I know you'd have.
For one, the lead time to build an actual physical infrastructure necessary to host miners is likely 6 to 9 months. In an interview given for the channel CNBC, Carter said the US probably can't be as mineable as other countries in terms of onshoring these stray miners. The move logistics also might prove difficult. There is a shipping container shortage due to the tailwinds of the COVID pandemic, but perhaps the biggest question is the reliability of the Texas power grid. A storm that devastated large swaths of the state in 2021 has reignited a debate over whether Texas should winter-proof its systems. This potentially costly project might affect taxes or other fees for those looking to tap into the state's power grid. More recently, ERCOT, the Texas Grids Organization, asked consumers to conserve energy amid what officials called an unusual number of forced generation outages and an upcoming heat wave. China's move could also prompt increased regulation worldwide. It's widely expected that the US will announce additional crypto regulations at some point this year, and India and Turkey have tightened up on crypto in recent weeks. This week has been a harsh reminder that cryptocurrency prices can swing wildly up and down. That's why it is essential to invest only the money that you can afford to lose, and also to invest for the long term. Investing for the long term means researching assets you believe will perform well in the next 5 to 10 years or more and holding them through the dips. That way, you don't have to lose sleep over something said by a government official on the other side of the world. With that, we have come to the end of the video. I hope it was helpful. What do you think about this new Chinese policy? Let me know in the comment section. Please like, share, and subscribe before you leave. See you next time.